all of a sudden you go up dramatically because, you put in the work, you put in, the effort to like build your skills, build your network and all those kind of things. So get in some small wins, but still kind of dream big. Also surround yourself with the right people. Toxic people take away your energy and your resources, even if you don't believe so. And these days, that's toxic people in person, but also online. A lot of people can waste time on toxic content, toxic comments. They can allow people to get them down, but also in person, right? So definitely kind of look at not just your friendship circle, but also your wider kind of habits on social media and think, well, is it kind of dragging me down a little bit without actually me understanding that that's the case?
Welcome, millionaires and future millionaires. You're listening to the Millionaires Unveiled podcast, a show where you'll hear the stories and interviews of everyday millionaires. We'll unveil their decisions, their strategies, and their portfolio allocation. Now to your host, Jace Mattinson.
Welcome back to another episode of the Millionaires Unveiled podcast. This is episode number 421.
This is the podcast where we dive deep into the inspiring stories of self-made millionaires from all walks of life. We are your hosts, Jason Stacy, and each week we uncover the strategies, setbacks, and turning points that led these individuals to financial freedom. Whether you're just starting out or looking to level up your wealth building journey, join us as we share the secrets and wisdom from those who have built their fortunes from the ground up. Get ready to learn, be inspired, and take actionable steps towards your own success.
Listening to the Millionaires Unveiled podcast with my dad, Jace Madison, and my mom, Stacy Madison.
Hey, appreciate a few of the concerns. I do apologize. We were in Asia and had a few little mishaps as it be to getting the podcast launched. Thought they were already kind of pre-done, preloaded, and they would just kind of automatically happen. And we made a few little errors, and thus they were a little delayed. So anyway, we're back on schedule, and yeah, summer's winding down. So it's gonna be a great one here. August is typically a pretty warm month, and going to be interesting to see what kind of dynamics take place in kind of the macro economy. We see some tariffs and tariff impact, and we're starting to get into some of those conversations with some of the millionaires that are coming on the show and whether or not they plan to make adjustments in their portfolios or have already and whatnot. So going to be some great conversations around that. Today we've got Adam, and he's got a net worth of 10 plus, and most of it is in his business, but he's got some in some other investments as well. And we get into the details of, kind of his exit from the UK early on and moving, to different places and investing in different currencies, and really get into kind of the expat conversation that I don't know that we really have dove into much. So going to be a great episode with him. Once again, if you'd like to be on the show, send us an email, millionairesunveiled@gmail.com. We're always looking for new, great, entertaining guests willing to share their stories as always. And we definitely appreciate all those who have shared thus far. I saw a statistic the other day. I think it was like, I don't know, some crazy six-figure number of newly minted millionaires in the United States alone last year. So we are climbing the ranks. We've got plenty out there. Would love to have you on the show if that's you, or even if you've been a millionaire for several years, maybe decamillionaire or more. We continue to get requests for those, although that pool I do realize is smaller. But so without any further delay, let's get right into the show with Adam.
You want to just give us about your background or what you're up to now?
Yeah, so great to be on your podcast. So I'm originally from the UK, but I've lived overseas now for 14 years in various countries. And my main business essentially is helping expats and high net worth individuals, our entities at least, do things like invest and also insurance and second residencies and so on and so forth. So like wealth protection and also growing wealth as well. So I've lived in different countries as mentioned, and that's given me quite a unique perspective really, because looking at things from different angles, from different cultural angles has kind of had some influence, you could say, on how I view wealth and how to kind of build wealth and how to also preserve wealth as well.
Yeah, that's really cool. And we were talking a little bit before the show about kind of the world journey you've been on. So I can't wait to get into a little bit of the details of that and what you do from a professional standpoint, which is really unique and cool. I don't know that we've really had anybody that plays in kind of the expat field at all, and specializes in that. But before we get into all that detail, what's your net worth today?
Well, I guess it'd be crude to give an exact amount, but depending on the valuation of the company and also liquid assets, you could say it's an eight-figure amount in US dollar terms.
Nice. In high level, how would you break that up from a percentage standpoint across, asset classes or your main asset classes?
Well, quite a bit. Maybe you could say roughly half or more could be linked to company valuations in kind of various countries because we've got various entities. But then, because by definition that's a little bit illiquid, even though it's fairly easy to find a buyer, when it comes to like personal assets, I prefer to have liquid assets. I do have a very small percent in things like private credit and those kind of illiquid assets. And in the past, I had more of those. However, the majority of my liquid net worth is either in stocks or bonds, or it's in cash, but it's in cash because we want to actually use it for things like acquisitions and company acquisitions in our space. So we more see cash as being a potential opportunity to buy businesses and assets, as opposed to like a good asset class to kind of hold for the long term, if that makes sense. Because obviously cash in general doesn't do well long term. Well, in fact, almost always it doesn't do well long term, right? So we more see cash as a way of being liquid enough if there's an opportunity in business to kind of pounce on it.
Yeah, makes sense. So no real estate at all?
Actually, no, it's quite interesting. So I guess in many parts of the world, I would be seen as a little bit crazy to, have half decent assets, but not have real estate, right? Because there's a lot of people, right, who basically all their net worth or most of it's in real estate. And I'm sure in the US, because we deal with American expats too, it's very normal to just have like most of it in a 401k and real estate and just a small amount outside. But no, I don't have any real estate, but there's various reasons for that. I'm not a huge fan of illiquid assets, number one. Number two, the tax advantages that exist in America and also Australia and a few other countries don't really exist in certain countries. So I think in America, depending on the state, you can do things like you can file for depreciation, for example. And in the UK, as well in many countries, you can get 95% mortgages. But when you're overseas and offshore, you're lucky even to get an 80% mortgage, often it'll be 70%. And if you're a business owner like me, no matter how good your accounts look, basically sometimes you have to put down like 40%, right, in some countries. And that significantly changes the ROI, right? Because, ideally with real estate, you want to use leverage. You want to put down as little as possible without being greedy and just buying 1,000 buy-to-lets and use the leverage, right, rather than putting down a big amount. So I think in the overseas market, even though there are positives with real estate like diversification, you might also want it for a holiday home and things like that. From an investment standpoint, though, you've got to consider those kind of things. So yeah, it is unusual, I guess. You don't have many people, I guess, like me, but that's the situation. Yeah. But having said that, I am considering one place to buy next year. But if I did, it would more be like a family home. It wouldn't really be like just for an investment.
Yeah, makes sense. I'm curious to kind of dive into this a little bit because it is a unique perspective that you bring up, the tax advantages that exist in the United States and what probably propels people from an investment standpoint to invest in that asset class more that don't exist in other places that you've been in or that you're living. Do you think that your mindset would be different around that if you had some of those tax advantages, or is it an asset class in general that you look at in differentiation to your business and say, hey, I know I can just grow at such a higher rate on my business, and I'm okay having exposure and concentration in that in my business instead.
If I lived in a place where it's more tax advantageous, I would consider it as a portion of my assets. There's still the illiquidity, which isn't great, but I would consider it. So, for example, in the UK, where I grew up and where I'm from, until relatively recently, real estate, it wasn't maybe brilliant like some places in the world in terms of tax advantages, but it was fairly good. But then the government changed the rules and they said that you can't even deduct mortgage interest now against your taxes, which is a massive thing, right? Because most investments you can deduct the cost, right? That, let's say you're on Interactive Brokers and you've got a margin account. Obviously, you can deduct usually the cost of the loan, right? So it does make a massive difference, the tax advantages in places like Australia and the US. So yeah, I would consider it. Having said that, as you say, if you've got a primary business and that business is doing really well, you can't rely on that forever. Having said that, if you've got a business that's growing very, very fast, or even just faster than the rate of, say, the stock market or real estate, and remember, businesses are not usually that liquid, right? Unless you've got a business on the stock exchange. That is a very strong argument to say, well, actually, you should put more into liquid assets in case you have an emergency or something like that. But obviously, everyone's going to be different. Everyone's going to have their preferences. But I would say for business owners who are already quite illiquid, you do have to consider how much to put into illiquid assets, including real estate, but also land, private equity, private credit as well.
Yeah, good deal. So talk to us a little bit about the journey you've been on and starting a business and then keeping cash on the sidelines for growth and kind of the mindset around, what you do from a profession and career standpoint.
Yeah, so I actually left the UK, believe it or not, one day after graduation. So it was a really difficult time in the UK at that time. So it was just a couple of years after the financial crisis where, even though some growth had returned, it wasn't the best time for young, ambitious people to, start out in the UK. So I just thought I would go overseas because my best friend, he's still my best friend, but he was also my best friend at the time. He's a bit older than me. He was in China and China was thriving at that time. So I didn't know what to do with my life, but long story short, I got into financial services soon after for a British-owned company. But then in 2018, I thought, well, more people are going online now. So I started an online company, a remote global company. And then obviously after COVID, that was seen as a good decision, right? But to answer your question about, having cash on the side and so on, in the financial industry, insurance, financial, and so on, some of the things we do are recurrent income based. So it is true to say that a good financial company doesn't have to necessarily have loads of cash by the side because you're going to know approximately, okay, this month, if you've got an established business, at least we've got this number of renewals, we've got this number of client assets and so on and so forth. Having said that, though, what we're doing now is we're buying out books of business, we're buying out our advisors. And so to do that, you do need cash on the side because let's say you're negotiating with a company or an advisor who wants 200 grand or 500 grand or whatever it is. That's something which is bigger than having 10 grand aside, right? So what I have learned is it is good to have some cash aside as a business owner because you have those unexpected emergencies. But also if you want to scale through acquisitions, even if they're not the biggest acquisitions in the world, you don't want to be in a situation where, you're left with a situation where you just can't pounce on those kind of opportunities. But by the same token, you've got to balance all these things, right? Because ultimately just keeping cash in, say, a company bank account for 10 years, never pouncing, there's a huge drag, right? So you've got to spend money as a business owner as well. You've got to reinvest as well.
Do you have a specific framework for yourself from the kind of the standpoint of deciding, hey, I'm going to keep this much on hand versus reinvest this much versus, maybe even pull some off for personal? Or how do you think about that as a business owner?
It's changed a little bit over time. So I think to begin with, you've got to remember the vast majority of business owners either had a job beforehand or they were self-employed. Maybe they had a job, they became self-employed, and now they're a business owner. Most people don't wake up and are business owners on day one unless, they're exceptional or they've got a family business. So therefore, it is very difficult in the early days to get over this thing of like focusing on your personal compensation. I think the vast majority of owners who start a business, especially in like a more traditional area like financial services, especially non-tech areas, it's natural for them to focus on, okay, how much am I going to get paid? Or how much am I going to give in terms of dividends or whatever, as one of the metrics. And I'm not saying that's always a bad thing, because some people, because they've been seduced by this kind of big tech thing whereby it's all about reinvesting income and then having a big buyout at the end, there are some people who just focus on business profitability over, or not even business profitability, but just getting the business to be like as big as possible because they want to sell out at the end. But what is true is, as your business grows, sometimes then you can see a bit of a bigger picture and you can kind of say, okay, maybe some years take a lower dividend and reinvest. I haven't come up with a specific framework for that, but what I would say is I still think in most businesses, in terms of a framework, if you are able to simultaneously increase your personal dividend as an owner, or at least keep it stagnant whilst growing the business assets, that's a pretty good sign that you've got a robust business, right? So let's say you've increased your compensation by 10%, but the business has increased its recurrent revenue by whatever, 30%. So you have reinvested, but you've also increased your own compensation. Usually that's a pretty good sign that you've got, a sturdy business, if that makes sense.
Yeah, for sure. How do you decide how much to put off into your stocks or your bonds or your other liquid assets?
So that's changed, I would say, over time, because in the early days, you've got to remember when you're overseas, you're not part of the social security system. So if you're from, Europe or the UK, it's not great compared to, say, somewhere like Sweden. But obviously, if you're overseas, realistically, unless you just settle in the same country throughout throughout your whole life, you're not going to be part of like the social security system, and so your status is a little bit more insecure. So in the early days, one of my big focuses was, if the business were to fail for any reason, I wanted enough assets to actually be able to say, okay, I've got enough to live off here and a little bit more so I can come back and see another day, maybe start another venture. So in the early days, the focus was very much get to a certain number as soon as possible. It doesn't necessarily have to be a massive number, but if it's enough to live, then that's massive, because you know that you can actually, basically be quite sturdy in terms of, let's face it, if you've got enough assets, you can even say, well, for 1 or 2 years, I'm not going to pay myself anything for the primary business, right? So my focus was to be financially independent, which would give me more choices. But I think now that, say, that's by and large, point for sure been achieved, the focus is more, I can actually say now, if I want to, I'm not going to put very much at all into financial assets. So I think now there's more choices, but early on, I felt like I had to be a bit more conservative and say, okay, the situation could change at any time in terms of the business, but now the business is more established and also enough financial assets. Then you can be a bit more adventurous if you want, I think, and say, well, okay, I'm going to take more risk now if needed, because, I've got more to fall back on. But obviously people have different opinions on this. If you go all in, that can also be good for certain people. But when you're abroad outside of most Western countries, you do have to remember that the risks are so much higher than taking a risk, say, in, say, Sweden or the UK, or for that matter, even, the United States. So therefore, you're already taking an exponential risk compared to doing it back home. So, and I think especially once you get married, once you have a serious partner, you've also got to consider they might be moving with you. They might be giving up their job and their career. So you've also got to bear in mind that. So that's how I try to balance the situation, basically.
Yeah, it makes sense. And I'm just curious, like living in all these different countries, how do you go about even investing in stocks or putting money in some of these more liquid assets that that you do in bonds and stuff. Like, give our listeners a little bit of an education on how people do that, in your situation, living abroad, traveling around, etc. What does that look like for you? And the other thing too, I'm curious, do you keep all your, are you in multiple currencies too? Or do you stay kind of in one or two?
I usually stay in one or two, because ultimately, if you're globally diversified, say if you buy an asset like the S&P 500, regardless where you buy it, in the pound or the US dollar or whatever, you're still getting the same exposure. But I have invested in two or three currencies just because we're paid in different currencies when it comes to the business. So sometimes it can make sense, but it depends where you live. So if you're moved to a really kind of frontier market, let's say you work in oil and gas, which is obviously a bigger industry in Texas and certain parts of the United States, and you move to, say, I don't know, Nigeria, on the oil fields there, basically there are a few options. There are some options, but you have to reach out to someone like me, or some people use their correspondent address, back home in the United States or Canada or wherever that is. Obviously, that can come with risks if you're not given the right information, but that's a situation. Whereas in most developed countries, even most mid-income countries, there are a range of options now for people. So if people want to DIY invest and they don't want an advisor, for example, then the likes of Interactive Brokers, for example, they can accept in most locations now. So there are usually like 3 or 4 main DIY platforms that can accept most nationalities in most locations. But there's always exceptions. But yeah, if not, most advisors have options that can help you as well.
That's cool. So at this point in your life and career, do you have a certain net worth goal, or do you want to grow the business to a certain level? How do you think about where you go from here on a growth and trajectory standpoint?
It's really interesting you say that, because it comes to like a deeper question, right? Because as you grow, you do get a satisfaction from growing something. However, it also comes with negatives as well as positives. So, for example, as you grow more, you're always going to get haters, for example. That just comes with the territory. You're going to get haters, you're going to get naysayers. Also, if you think about it, if you have just 30 high net worth clients who are all your personal friends, who you get on well with, probably you're not going to have any complaints for your whole life. You might have one. Whereas if you extend it and you have 1,000 clients and they're all around the world, and a lot of the conversations we had years ago, and they're getting different opinions from their spouse and our advisors, then naturally those kind of things are going to get bigger, right? And obviously in the social media world, there's plenty of people as well who are worried about negative comments if their kids see it and things like that. So honestly, at this point in my life, I am actually kind of considering that question very, very carefully. I haven't made up my mind completely yet. What I have made my mind up, though, is that these days I'm more focused on like being an investor status within the industry. So traditionally, I was actually the advisor on the accounts for many clients. But going forward, I'm kind of focusing on, building the team out, which has already happened, but also like buying books of business rather than actually being the named advisor, if that makes sense. So more focusing on kind of running the business and buying assets for the business, like buying out financial advisory companies or advisors, as opposed to, doing the advisory myself. In addition to that, I've got a lot of things in the pipeline, like, we're getting licenses in different parts of the world, like East Africa. We've also invested in a venture in Singapore as well with partners. So we are expanding, but then the question comes, how much hassle do you want? How many problems do you want? Because, more money or more prestige or whatever it is, that's fine. And it sounds politically incorrect, but obviously it's true that can give you satisfaction and happiness. But by the same token, it comes with its problems. So I think at this stage in my journey, I'm kind of a little bit on the fence. To be honest with you, when it comes to that, I haven't completely made up my mind. I might just wake up, say in 5 years, and say, you know what, I'm going to step aside. I'm going to appoint a managing director. I'm going to be, semi-retired from my main business, but then kind of focus on a different business. Or I might just say, you know what, I'm just going to go full throttle. I really haven't made up my mind, but I'm sure if you speak to other business owners who have expanded their business, what I'm saying is actually not that uncommon. And I'm sure it gets much worse when people get to much larger, like huge amounts. So when you speak about massively successful entrepreneurs, you think about it, someone like Elon Musk, right? I mean, 15, 20 years ago, when he was already very successful at PayPal, he would have had less money, but obviously a lot fewer haters, a lot less stress, a lot less likely to be brought into lawsuits and so on. So I think, but even at a lower level, when people go from, say, whatever, 5 million to 10 million to 50 million, whatever it is, a lot of people out there, they just focus on the upside, but they've also got to focus on the downside and what they're willing to sacrifice as well.
Yeah, thanks for sharing. How old were you when you started your business?
I was 29.
Okay. So you had been in the post high school, I guess, real world for quite a while. Do you remember what your net worth was when you started your business?
It wasn't very much. It was maybe tens of thousands of dollars, I would guess. Yeah.
Did you always have dreams of kind of having your own?
Yes, I did. But what's interesting is, I think for most entrepreneurs out there, even though obviously it depends on the individual case, I think for the vast majority of people, money is a motivator, but it's actually number two. The number one motivator is usually personal freedom, because a lot of entrepreneurs out there were not particularly ever good at taking direction. And I can remember when I was in school, and like a lot of school kids, boys especially, I wasn't that good at taking direction. And I can remember I spoke to a guy who was a self-employed taxi driver, and he'd worked all around the world in a previous life, and he was just doing it for a few years until retirement. And he once said to me, "Oh, you should start your own business one day, because then you don't have to, wake up at certain times, do this, do that." And honestly speaking, I myself was not a good employee. And I think that's very common for most entrepreneurs. There are exceptions, some super successful ones, like Jeff Bezos was an investment banker, for example. But I think most entrepreneurs struggle to actually deal with direction. So, for example, Kevin O'Leary, one of the Shark Tank judges, when I spoke to him a few years ago, interviewed him, he said to me that when he was I think he was a teenager or something, he got fired on his first day in the job. And from that point on, he said, "You know what, I really want to start my own business," because he didn't like being told what to do. And that was kind of my dream. But of course, as a child, you only focus on the positives, or a young adult, you only focus on the positives. You've also got to remember the negatives. And having gone down this route myself, I think it's great. I don't regret it for a moment. But I do think there's a lot of people out there who would just benefit from having a job, or being, let's say, a sole proprietor, which is quite different to, hiring people, including freelancers. So entrepreneurship is fantastic, but I do think that now with social media, everyone thinks it's for them, when in reality, some people would do just as well, just to say, "I'm going to have a job, or I'm going to be self-employed," but not go beyond that into hiring people, and maybe invest on the side. So there's different models for different.
Yeah, no, I appreciate you sharing that. Well, Adam, let's wrap up with some rapid fire questions. What's the most expensive pair of shoes or pants that you purchased?
I'm very frugal when it comes to clothes, and my wife buys most of my clothes. So honestly, I reckon probably maximum would be $150, and probably most of them is like $20, $30. Yeah.
Okay. What about the most expensive meal out?
Maybe about $1,000, maybe.
Okay, that's not terrible. What about the most expensive vacation or experience?
Probably about $15,000. About, yeah.
Do you remember where you went?
Well, there's been 2 or 3 like that. I mean, I did a safari once, which was great, 2 countries, and it was absolutely fantastic, because it was something truly unique, right? It's a bit like going to the Amazon rainforest, which I've never done. Doing something like a safari is an incredible experience. Doing it in 2 countries was great. Although I have to say, the funny thing is, I'm just back from the US, mainland US, and Puerto Rico. I'm not sure I quite spent $15,000, but I've noticed these days big US cities can be really expensive, actually. So actually, whenever I've gone to the US, especially the tipping, as a non-American, I really struggle with the whole tipping culture and how that adds to the whole bill. So some of the US trips haven't been, they must be close to the top of the list.
Yeah, tipping culture has gotten a little crazy, and you gotta check too whether you're tipping on the taxes that are getting charged on the bill too. And if you're in some of those big cities, they got about 10 different taxes they're charging on there, so it can get a little crazy. But I hear you on that. When I travel outside the U.S., I'm always kind of a little relieved of like, hey, there's not this crazy expectation to leave 25% tip. If I leave anything, they're like thrilled. But anyway.
Absolutely.
What about the most expensive car? Or do you use public transport?
Actually, cars again is something I've been very frugal on because a lot of the places I've lived in, I've just used public transport because it's been more convenient, and getting a license has been difficult. But after we got a dog, we had to get a car. But again, we just got a second-hand car, so just a cheap car, probably about $10,000 or so. So yeah, with cars, we've been extremely frugal. We spend much more on traveling than cars, that's for sure.
Okay. What's the craziest thing you've ever done to earn money?
Oof, that's a good question. That's taken me by surprise a little bit. So craziest thing I've done with my money. Well, when I was there's probably two or three candidates for this. One thing is when I was quite young, actually at university, age, I had a little bit of money because I would work, whatever. Not a large amount of money, but obviously it was a large amount of money for me at the time. And I was a bit worried about the whole economic crisis or the potential for one in 2007 and 8, just before the crisis. So I bought some gold then, which obviously wasn't crazy at the time because subsequently it went up a lot until 2010 and 11. But at one stage, I had 100% of my net worth in gold and silver. But like then obviously it went down, and it taught me a very important lesson, because obviously online there's always people who are saying, there's going to be the next economic crisis, doom and gloom, buy gold and silver. I'm not saying it can't be part of a portfolio, but being 100% obviously was silly looking back. And I ended up losing quite a lot of money because actually I held on for so long. So the funny thing is with gold, I was up by like 100% in 3 years. With silver as well, I was up by about 80% in a year. But then I held on. I thought, well, it's only going higher. And I think that has to be one of the craziest things I've done. I didn't lose all my money, of course, but obviously it wasn't the right decision long before my investment days. But it taught me quite a good lesson, I would say, because the funny thing is the initial logic, not going 100% in the assets, but the initial logic, actually, you could say there was some logic to it. And in the early days, it was working very well, but until it didn't.
Yeah. How did you make your first buck?
First buck, actually, it was in terms of my own money and not like just small amounts from parents, like pocket money, was actually a paper round. So I did that for about a week and couldn't stand it. And then after that, I got a job as like a part-time waiter when I was a student. So yeah, first time I think was some cash in hand when I was about 16.
Do you remember how much you were making? How much you made?
Oof. Well, as a waiter, it was about £5 an hour, which at the time was about $7 or $8. But as like the paper round must have literally been only about, if you worked out, to $2 or $3 maybe an hour. It was literally not worth it at all. It builds character, let's say, to do something like that when it's raining and so on. You're 16 and just trying to make a quick buck.
I hear you. I did paper route for 6 years, so I get it. What was your GPA?
We don't have a GPA. I think that's the university, isn't it, in the US, right? If I'm not mistaken.
Well, actually, we probably have GPAs now, almost in middle school, high school, I guess, and college. But yeah, how would you say you scored overall academically?
Yeah, I don't know how to translate it to GPA, but I was a late bloomer, let's say. So when I was in primary school, early high school, I wasn't good at all. But by the end of high school, I was kind of, you know, quite a bit above average. We might say like the 70 percentile or 80 percentile, nothing particularly
Okay.
special. But then in the UK, after high school, you do something called college or sixth form, which is different because in the US, college is university in the UK. So between 16 and 18, I improved a lot. I got a very high score to go to university. Then in university, I got the highest grade, which is called the first in the UK. But I think it comes back to what we were saying before, because when I was like in early high school, I didn't really like it when the teachers told me what to do and just like, oh, do this because I said so and that kind of thing. But I think as they relaxed more, as I got closer to adulthood, I actually thrived in that environment more, which kind of leads us back to what we we're talking about with entrepreneurship, that I think I always thrived in those environments where I wasn't told what to do so overtly. Whereas obviously, like, I don't know what the US is like, but in the UK, at least in those days, high school was a bit regimented. You were just told what to do. And so I didn't really thrive in that environment, like in early high school, at least, let's just say.
Okay. What's the dumbest thing you've ever wasted money on?
Well, I mentioned the gold and silver is one thing that was silly, but apart from that, I would say one thing I did a few times. I haven't done this for a long time, but often, like I've not often, but a few times I've kind of left phones, on trains when I was like late teens, and obviously I was a big waste of money. And then apart from that, what else is a big waste of money? I would say, as a business owner, some of the best and worst ROI I've ever had is in people, because people are a drain on your resources, right? Because ROI, you should also look at ROI adjusted for time and effort and hassle and risk, right? And if you think about it in that context, people can be the best ROI or the worst, because let's say if you lose money on someone, that's one thing. They might have tried their best, but let's say they've cost you money and time and hassle and all these things. I think some of the hires were disastrous, but some of the best hires have been absolutely fantastic, which kind of makes it worth it.
Yeah. What's something you spent way too much money on but you don't regret?
I would say travel and experiences, because I think what I have learned is things can be great, right? But you get used to them, right? If I bought a really nice car tomorrow, it'd be great for a few months maybe, but I'll get used to it, right? I understand people have different views on this. Maybe a house is something you can do more with because you're always there. But in general, I find that like things don't give me that much pleasure. Whereas if you have a good experience, you travel, you go to a decent hotel, you travel business class or whatever, those kind of things, I just find you don't regret as much. Whereas in comparison, I think things, they give me very limited satisfaction. Another thing, by the way, I think is I have a pet, a golden retriever, and I would never regret spending money on my pet, that's for sure.
Okay.
I think actually we see him down here, or he did maybe 5 minutes ago, just walking around.
Nice. What's a closely held belief that you once had that you recently changed your mind on?
I used to believe that the average DIY investor should have stocks and bonds in their portfolio. The standard advice, which, by the way, has worked very well historically, where you should start 100% in the stock market in your 401k or whatever it is, then go to 90-10, 10% in bonds, then 20, then 30, then go to the 60-40 portfolio. But what's become clear is government debt is higher than ever around the world. Politicians have always been a bit crazy, but obviously, like right now, monetary policy all around the world and fiscal policy, it's whether you look at Turkey or you look at some developed countries, everywhere really, there's a lot of political risk now when it comes to government bonds. So I think even an investor who isn't sophisticated, they can look at things like, for example, corporate bonds, a corporate ETF or bond. They can even look at higher risk assets like private credit, private equity, but they do have to do it in a conscious way that they are taking more risk. So I'd say I have changed my mind on government bonds and how much you should allocate to it, especially when you're relatively young. Even if you're in early middle age, government bonds, they have a place, but definitely the risks are higher than before.
All right, nice. Any last words of advice for somebody who's just starting out on their journey?
I would say for people starting out, it's great to dream big, and I think it's good to dream big because obviously you're going to work harder if you dream big. But what I would say is get in a few small wins. That can make a big difference, because I found when I was struggling, and I've had plenty of periods in my life when I have, it's hard if you're not getting in those small wins. So even just improving incrementally, you find, especially doing something like entrepreneurship, that quote, "It took me 10 years to be an overnight success," is actually often very true. You can't necessarily expect everything to be linear, that you're going to improve by 10%, 20% every single year. It might be the case you stagnate for 5 or 10 years, and then suddenly, all of a sudden, you go up dramatically because, you put in the work, you put in, the effort to like build your skills, build your network and all those kind of things. So get in some small wins, but still kind of dream big. Also surround yourself with the right people. Toxic people take away your energy and your resources, even if you don't believe so. And these days, that's toxic people in person, but also online. A lot of people can waste time on toxic content, toxic comments. They can allow people to get them down, but also in person, right? So definitely kind of look at not just your friendship circle, but also your wider kind of habits on social media and think, well, is it kind of dragging me down a little bit without actually me understanding that that's the case?
Awesome. That's Adam with a net worth of $10+ million. Thanks for on the show today.
A pleasure. It was really great speaking.
Thanks for listening to the Millionaires Unveiled podcast with Jace Mattinson. For more stories, investment opportunities, and information, check out our website, millionairesunveiled.com. See you next time when you'll hear from another everyday millionaire.